Good morning, traders. How we doing out there? Welcome to pre-market prep. Let's go ahead. We got a lot of growth to talk about. We caught a little bit of a bounce there. We're going to go ahead and talk with the one, the only Dennis Dick and Joel Elconin. You guys do me the favor, hit the thumbs up, and let's get pre-market prep started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders. We're going to go ahead and get into the recap year-end lookout. We're going to take a look at China. What news came out of China today? Bitfarms, a little bit mentioned in there. We'll take a look at some of these Bitcoin stocks. MMA, ticker time. There's a lot to talk about out there. I even saw news on some oil, so definitely stick around, guys. We got a lot to talk about. Let's bring on Joel Elconin. What's going on, man?
Good morning, Mitch, and happy New Year's Eve day here. Boy, let's get started because we got a lot to cover. No tangent Friday here. I'm not going to do any tangents the rest of the year.
All right, real quick, if there's anybody in my area, in the Boulder area, I just want to give a shout out to you guys, and definitely a prayer to anybody that's affected by the wildfires. No one likes to see a home burned down, less alone, many homes burned down. So especially starting the new year, hopefully those families can have many more blessings into 2022 than this kind of starts. So let's go ahead. Let's get into the markets, though. Let's talk what happened out there. Joel, what did you see?
Well, we had some follow through from that weak close and got as low as 47.50, but nice rebound right now near the area of yesterday's low. So we'll keep on that pre-market high, 47.76. Need that to get back anywhere near that old-time closing high of 82.25. And I don't have anything below that pre-market low of 50.50 until 47.30. Crude, good year, bad day. Down $1.29 at 75.70. Gold perking up here once again, challenging this 1820 area. Can it actually bust through this time? Up 640, 1820.60. Silver up a dime at 23.16. Bitcoin, give it a try and end the year around 50K, up 975 at 48, 185. And Ethereum up $80 at 3,795. Triple D, another year comes to a close, and boy, oh boy, we got call it the year of the rotation, and
you're exactly right. The rotation was nothing short of incredible, and to cap it all off yesterday, that rotation was just awesome. I've never seen rotation like this, and you could almost feel it, that they were buying the growth stocks so much that they were probably going to start selling those assets, those risk-adverse stocks that they've been hoarding into just to raise capital to go move it into the growth names. I mean, we saw Procter & Gamble getting hit yesterday. We saw XLP getting hit yesterday. And this was kickstarted by that list that we've been talking about. It's 2 days early, but the tax loss sellers are done in Canada. I don't know other countries' tax structures. Some might be on settlement too. So some of the tax loss selling was done. They came into that list yesterday right at the open, and they could not stop buying it. Stocks, and we just go through it, and we gave the whole list a couple days ago, but everything that's in the ARKK was just getting bought hand over fist right from the opening tick. And in that first 10 minutes, it was straight up, like almost algorithmic driven even. It was so strong. Peloton, which was the only one that I had double start on mine, that went from 34.50 to 36 in a heartbeat right off the open. Continued to run up. It gets a downgrade today. I think that's a buying opportunity in the short term. Again,
let me go ahead and get that news right quick, Dennis. So JMP here, security downgrade the stock to market perform from market outperform, citing website visits and page views.
Thanks. So late to the party there. Again, I
That makes
believe
me
you're.
bullish.
So people are asking me because we had such a good pop yesterday. A lot of those stocks on our list were 5-7%. One, people were asking me, did you get down and dirty in any? I got some of them. It was tough because they went so fast, like literally 9:30. If you weren't buying the opening tick, at 9:35, a lot of these stocks were up 2-3%. So you could see it. It was lighting on my filters, like, oh, it's on. You know, I could feel it was on. So then I went looking for the laggards, and I'm looking for what hasn't gone yet. And I was able to pick up about 7 or 8 of the stocks on my list. And I have them all on for swing longs. I've sold none of them. So I think, you know, we're going to get a pullback here today. I think you're looking at that list as an opportunity to position yourself again for more of this January effect. Now, you know, anything can happen. I mean, maybe they come out and they just start hammering these stocks again. But again, you know, they're oversold. So we've been talking about this trade set up for a week now. They came 2 days early, but now they're giving you an opportunity where we've got some of them down here in the pre-market that I think you do strike. I think you do strike for swing trades, not for long-term investments. So stopping yourself out, maybe you're going to the lows of the move to stop yourself out. We always want to, you know, control our risk as best we can. Probably yesterday's lows is where I would stop out. Obviously, we still are not turned the calendar clock here yet, so there could be a little bit of Johnny come lately tax loss selling, but I think I would be buying into that. So again, if you want to know the list, like Hood was the one of the number one stocks on my list as well. I did not get that one. Peloton. I'm going to talk about the ones I don't like talking my book, so I'm going to talk about the ones I didn't get. So, but these are all the same thing. They're all moving together. They're all grouped together. Peloton is there. Alibaba. People are wondering what happened with China stocks yesterday.
Wow.
Well, we know what happened. They've had the crap kicked out of them all year. There was going to be tax loss selling holding them down. As that abates, there's going to be, you know, that maybe that lift coming in and maybe people trying to come back in and get in these stocks again. So, I mean, Baba, huge day for Baba. Baidu, huge day for Baidu. Look at that candle, Joe. Look at the perfect double bottom in Baidu. 35.85, 35.91, and then it ripped $15. It ripped 10% in a day. These are huge moves. So the dash for trash bell, the dash for trash was absolutely on. And it went on so much that about 20, 30 minutes into the day, they started hitting the consumer staples. They started hitting the utility stocks to a certain extent. They even started at the end of the day starting to hit the mega caps. They started hitting Apple and Microsoft. Why? Because they were raising cash to put it in the trash. So in the trash stocks, in the rotation, I've never seen rotation like that. Like when is SPY? But SPY has actually become a defensive asset in this market because it's those 5 mega caps that have the lower valuations. Well, they were coming out of that, moving into that, and that could continue in the new year. So I'd be careful right now. Again, I own all these stocks in my long-term portfolio. I'm not saying go sell your Microsoft, your long-term. I'm saying for trades right now, I'd be careful. And they actually set up from the short side here, you know, for the next week or two. I don't think it lasts. I don't think we're going to have this growth year where all these stocks and, you know, are going to explode hundreds of percents and, you know, we're all going to be back to 2020 again. I think you're looking at maybe a week or two phenomenon early January. That's my prediction. Not always going to be right, but that's what I'm predicting. So I think you do want to be positioned in the next week, though, in those higher risk names.
And you know, we're talking about like the overall market risk, and you know, with the SPY and these the concentration, these top 5 stocks, right? If they get hit a little bit at the beginning of the year, I think it's, you know, the growth, it bodes well for the growth trade. But sometimes the market turns and like we just got to sell it. You know, you have one of those sell everything moments, and then that's going to make it a little bit tougher. That's the only fly in the ointment that I could see. And the way we're setting up, that was an ugly last hour. I mean, anybody that doesn't think that's one of the worst hours, right, at least in the last 6-7 days here.
They did start rolling over ARKK in that last hour too. It got
so
ugly that they started hitting those too. I mean, it was a really ugly last hour. You're correct, Joel. You look at the SPY 478 down to 478. Like I was like, what's going on? And then after hours, they hammered it more. We did come back. We did bounce back. We've got most of those losses back. But, you know, the rotation, you've got to be following it because that's what matters. I mean, people, you know, on CNBC are just, you know, 2 steps behind all the time. Multiple people coming on there and they're trying to put, you know, fundamental reasons why Alibaba rallied 10% yesterday. I mean, we've been talking on this show about the setup for this to happen. in the Chinese names and all of the beaten down growth names. You know, Alibaba's right on the list here. Baidu's right on my list. You know, and all of these stocks were the ones that ripped. This isn't, you know, stuff that's, you know, technically based. Those were all in ugly, ugly charts. This is stuff you find out by reading seasonality trends, rotation. It's stuff that people don't take the time to understand, and that's why it still works. You know, like you can look at a chart and say, oh, the chart looks pretty. Well, there's 6 million people looking at charts. You think you're getting a real edge that way? But people don't understand like the still seasonality effects, you know, the little things. They don't jump into it, stuff like that. They're not, you know, and even on CNBC, like they're still questioning why was the Chinese stocks? And they'll find some fundamental reason to justify it. And the real reason is right there. They got the crap kicked out of them all year. The tax loss selling is slowing down and maybe stopping. And people are saying, hey, we've got that January effect maybe coming. So let's get ahead of it. And they started jumping in there yesterday.
And also, and I, you know, when I was, it kind of was like a buyer's strike, right? In these big stocks, like they weren't like, you know, here they are near all-time highs, great year. So they're just peeling out. And in the morning, couple times we actually made a new all-time high, you know, up in the area of those other two highs. And you know, there's a point where, you know, you can sell on strength, right? Much easier, you know, to get your offers lifted and then put more out there. And then they were patient and they were patient and then patient, and then in the last hour, boom, when you know, when it was like so begrudgingly, like it wanted to stay green, and then there was the flush. So, you know, lack of buyers in these big caps, and
they're overbought as much as the other stuff is oversold.
Yeah.
So, you know, we've focused on the beaten down names, but, you know, we maybe should have a list of stocks that are really overbought. I mean, we've talked about, you know, Procter and Gamble.
Jeez.
Like, come on. This stock ran from 145 to 165. This is a consumer staple. That's one of the biggest moves Procter and Gamble probably had in years. A 20-point rally like that. It's way overbought. People are hiding there because they're like, oh, I'd get killed in growth. I need to be in something safe. They're going to get killed in these things too. So, you know, your Coca-Cola hadn't even sell off yesterday. But you know what? If these growth names start to catch a bid in early 2021 or early 2022, they'll hammer Coke. They'll start hitting those stocks too. And a hammer is a relative term because a hammer for a utility stock or a staple, you know, is 2, 3, 4%. It's not going to hammer 20%. So you got to understand, you know, what stocks can move. But I think if you're hiding in all those names right now, I think you got the trade on backwards again. We do this all the time. You know, when I get convicted, I'm really convicted. And I feel like I'm right more than I'm wrong when I'm really convicted like this. And we've been talking about the potential for this. I've got an intruder apparently. And, you know, so here we are, you know, with the setup. And the setup continues to, you know, wow, that's distracting. Okay, kids, dog. I got a dog in here that isn't even my dog. We're babysitting a dog. So, anyways, so I lost my whole train of thought because I got kids and dogs attacking me in here. But bottom line is,
dogs are barking.
I sent the dogs barking.
Well, the dogs are barking. I mean, the dogs of 2021 started barking yesterday. I think that barking continues. So again, all the names that I bought yesterday, and I said, like I said, I got 7 or 8, but I'll be looking to buy more on today's pullback. Those names, I think, continue to move in the first week here in 2022. Again, these are on for trades, but I think there's a potential. You know, you saw an 8-10% squeeze yesterday. Potential that some of these things go up 20-30% in a couple weeks. Some of them.
And these are the swing in naked, right? You're not laying off with
hedging it.
Yeah,
they're hard to hedge, Joel. I mean,
I know.
What are you gonna? So you hedge the growth. You can hedge it like with something else growthy, but then you're missing the trade. These are swings. So okay. Yeah. So here's the bottom line. You guys want to know trading. My long-term investment portfolio, I never hedge it unless we're going into a pandemic that was blatantly obvious. That was the only time, obviously, I took some portfolio insurance and bought some puts. But for the most part, I'm always net long. I move the cash position around a little bit. When I'm feeling a little bit more bearish, I raise up the cash. When I feel a little bit more bullish, I lower the cash. That's what I do in the long-term portfolio. My swing trading portfolio, I go either way. Right now, I'm sticking on growth. It's not hedged. My day trading portfolio my overnight portfolio is always hedged. I'm always trading that market neutral, trying to extract alpha from little pricing market inefficiencies. So, you know, so that's a different story. We've talked about that stuff in the educational stuff. I don't talk my day trading portfolio much on this show. This show's focused more to swing trading and longer term investing. That when we do our educational segment, sometimes we focus on that stuff. that stuff is very consistent. My short-term, my day trading is very consistent, but I can't be becoming like, we talk stocks on this. I don't even know what I'm going to be day trading. I day trade everything. So, it's little setups. Some of it's technical based, 90% of it's relationship based. So like yesterday, even you start seeing these growth names go. I start buying some of the growth names, start picking up the laggards. It's news based too, Joel. If I think the alpha, is extracted from the news being overshot, which a lot of times it is, then I'll short the stock. I'm not afraid to short stocks. I short stocks all the time. If I look at my portfolio right now, I'm short about 35 stocks overnight. So, and those are all going to be covered today. I don't try not to talk about those on the show because I don't like it influencing. I don't want to be one of those that talks my book. So I rarely, I'll talk my long-term investing books. I'm not doing that, but I will rarely talk when I'm day trading because it's not about that. I'm not about, oh yeah, here, let's pump up my book. No. I don't
really?
like
Do people do
that?
that? I didn't know people did that.
Too many. I think they should crack down on it. I think it's bullshit.
Yeah.
Well, okay. Anyways, though, I swore there because I really hate that pumping stuff.
You swore yesterday, too.
Yeah, I know. We're getting loose-lipped here. We should start cleaning it up for 2022. But let's, bring it back right in here, Joel. So we set up for 2022. What we have set up right now, we still have growth names that are massively oversold. We have mega caps that are massively overbought. We have consumer staples that are overbought. If that trade reverses, and I think it will in the first week, it sets up for some interesting trading.
Yeah, it certainly does, and with the with the technicals, I mean these things are pretty much near their lows in the move. And yesterday, what we talked about was like when I was looking at the ARC yesterday, it had the bump right off the low. And it pretty much it came back into the like mid range, and I'm talking about this whole move here. So, and actually, I looked at it on a couple different charts because you don't really want to risk down to the I mean, you can risk down to the low of the move.
I wouldn't. Risk that far.
Yeah, I mean, but it look at the prior day's low, and what did we have here?
I'll call it a double bottom.
Yeah,
pretty
little
close.
bit of, and look at this low right here too. So set the trades up. Look at them, technically, get an area. It's always better if you get a retracement and it's near like a daily low or 2 daily lows or things like that to be able to set up on. And then, I've looked at ARC. I mean, if this thing could clear $100, and I mean, we've had, one high at 100 and a couple just under that, then the market structure changes from just getting peppered on your bids. And I think that's what happened yesterday was in that first half hour, oh, no tax loss sellers there. We got to get in, no offers, and you're buying into strength. And then, they get whatever. They decide to take their foot off the metal at, 96 and a half, and ends up going over 98 and coming back. But we could drill down on the
I think you're buying it. I think you're buying these right here on the pullback this morning. I think it's the opportunity, and I might be wrong, and maybe the tax loss selling just hammers it down to those lows. I do like that level. I think that's where you're stopping yourself out if this thing was to breach 92.78. We do have the risk of today. The risk of today is that there's Johnny-come-lately tax loss sellers coming in. So it's we're a little bit early on this trade. We had to get in early, yesterday morning. You had to start buying those layers because you saw the rip start happening. So, and I did, like on some of these stocks, I picked up 3, 4, 5%, and I'm still in them literally in one day. So I think on a pullback here, I think there's going to be people looking to do exactly what I'm doing because it's a little more obvious now. So I think you're going to see a pullback on some of these names this morning. I think you're striking and getting set up for that first week of January. Again, they might pull the rug out from under us. So I think you're right. I think if ARC goes all the way down to 90, I think the trades, you got problems in it. You kind of want almost immediate gratification on some of these. It's not sit around and wait. We're not fundamental investors in these things because the fundamentals, let's be honest, on a lot of these high valuation names are not, good enough to justify where the prices still even are. So I don't want to own Peloton long-term on fundamentals. Sorry, Joel, because, I can see what's happening. But do I want to own it as a short-term trade when it just started ripping some shorts apart in the last day? I think so. So I think JMP Securities is exactly downgrading at the worst possible moment.
Oh, my gosh.
I think there's room to 40 here. So I'm not
yeah.
thinking room to 60, but I think there's room to 40. Stock's at 36. That's a 10% trade right there.
I got an interesting question here. One of the things that I was thinking about yesterday, what could have been the reason why yesterday was the day that they started buying into that? A little part of me was thinking, some people some traders just probably taking today off, it being the 31st and all. Some people just don't like to work New Year's Eve. So they might
It'll
have
be
jumped
quiet.
already in and looking into the swing trade essentially from Thursday, not from Friday. And another thing that I'm looking at is last year on the first day of January, we got a quick washout.
Yeah, we did.
That's my only concern here, is that the smart money wash it out to, like, let's say hourly supports or a deeper time frame support and then pick it back up. That's the only thing I'm going to be a little bit concerned about going into early next week.
If trading was easy, we'd all be millionaires. So there's going to be shakeouts. It's not going to be a straight up line like it was yesterday morning at 9:30. And let's be honest, it wasn't like I was buying at 9:30 on the opens. I just saw about a dozen of those names rip 3-4% in the first 5 minutes, and I was like, I got to start finding the laggards, so I started jumping in, and I was able to get, like I said, I went through a list of 50 stocks to find 7 or 8 that hadn't moved yet. So I would have bought them all. Don't kid yourself. If there was like 3, 4 and I was really convicted, I'd bought the whole list. Not joking. I'd buy 50 stocks. But I couldn't get that many because some of them were up 4 or 5%. I was like, I need a little pull. I don't want to chase up 5%. When stock ran 5% in 5 minutes, I don't want to chase that. So I was looking for the ones that were I even tweeted out to my followers, to say, because we know, like I asked, like, what growth names haven't gone up yet? Because I'm looking at my list, but maybe you got something on your list. And a few people were throwing some tickers out there, but it was tough. It was a tough trade to get on, and that's why I like it more, because it wasn't easy to get on. So a lot of people don't have that trade on. They might even have it short. They might even have it the wrong way. That's why I like it even more here.
One thing, and I know you're, with your master execution skills, doing, no, seriously, working the bids and offers
Well,
and
try our
stuff.
best.
Well, no. I mean, you know all the different exchanges. I mean,
Oh yeah.
The only thing I would say, and I know you don't like to do this, but sometimes you can catch things like on a stop, right? Like when I'm looking at ARC right here, like if you were looking at that, I know you get done with your open and you're like, man, I want to buy this thing at 94.50. I mean, you basically, unless you had whatever, it had the pop in the first 15 minutes and it came back to 94.50. But what I'm just saying, if you want to, if you're hard to catch it on the bid and offer, sometimes, some trades you can just get in and run get the stop in, and it, some of those trades are boom, they're immediately in your favor. Whereas
You're
if you
saying
had to
buy in on using a stop order?
yeah,
Like to get long.
yeah.
Ooh.
And that's an interesting strategy. I have used that before. There's nobody that uses that. Like who puts in a stop order that they don't even own the stock, to get long. But I've actually done that
I
before.
do.
Yeah, it's interesting. Nobody
use it-
talks about that. That's
I
an
use it
interesting
for-
strategy.
I use it for adding share size, but not an original entry.
You
So
normally
you're
think
willing to
stop
use
is like
it.
a stop loss.
Yeah.
Bro, you use it for an original entry.
Oh yeah. Yep.
All right.
You
You're not
can do
worried
that.
about
The
you're not
order
worried
will
about
go
the
in.
fill.
Well, I'm talking. I'm not too worried about it because if
Okay.
I'm holding
I
it
mean,
for
you
something
know,
longer,
you have way more experience than.
I tell you, if
me,
you try to
probably.
do something in the e-minis, I mean, sometimes you just have to be like if I have a juicy level and I just don't want, if 3 tops or something in the same area and I want to be long, boom, yeah. And then it's also the kind of trades where, and it depends what you're looking at, whether you're trying to get in long term or short term. But sometimes on those trades, you get instant gratification. If you don't, then like yesterday, I'll just give you an example. 4,800 in the S&P, psychological level, right? Right, and then you figured bunch of stops there and everything. When I tried to short it in the morning, I had a stop, but above there to go long because I figured if it got through, I wanted
Then you
to
wanna own it.
reverse. As it turned out, it's just different ways to get into the market, and using buy stops and sell stops. I mean, you could use if you're getting in and it's a thin stock, you might want to do a limit, right? A stop limit, but yeah, there. Someone just mentioned there a lot of different ways to skin a cat in this market.
And there's discretion, there's conditional orders, there's a lot of different order types to get in on that, to get in on the momentum. The one thing is that order is a chase order. There's no doubt. Like, I mean, when you're putting a buy stop and you're getting it up there, you're basically chasing a move usually,
Yes.
and so you're considering that the chase is going to continue. Would have worked very well yesterday. In a lot of cases, I don't like to chase, so it kind of goes opposite to my core strategies. But sometimes you got to break the rules when you know how to break the rules. And I mean, that's, something that, maybe we should teach sometime too, because there is a time when rules should be broken. I mean, when we're in this crazy choppy market like this oscillating and you're using stops and protecting yourself, you're getting chopped up and losing money like crazy. So, I mean, there is a time and a place for everything. And in some cases, it's like, wow, you can't be stopping yourself out every trade on that for 1% because you're going to lose on 90% of those trades. So, there's a time and a place, obviously, for, when you're actually not using, risk per order protection. But it's interesting. I mean, but that's an interesting entry point, Joel. And I don't think we've ever made that point about entering using a stop.
And I just want to say one other caveat to that. In the first half hour, 45 minutes, something like that, or in the last hour when there's liquidity, but like in the middle of the day and it's just bouncing around, I'll be like, okay, whatever, because a lot of times intraday, the first half hour, first half hour, the last hour, those strategies kind of work. It's just kind of things, unless you just have like a level of levels and you just don't want to miss it. Maybe you can leave it out there intraday. But I'm talking primarily the first hour. We took a hit this morning. And overnight, but it's interesting. We're very quiet here. Right at yesterday's low. We also had Tuesdays and Wednesdays low right in this area. So I think looking for like the overall market. I mean, I think early on, like off this open, I mean, we got to get green. We got to get this thing green. We got to take out the pre-market high. But also, I just think you're going to, I don't know if you're going to see the same kind of sell-off that you had in the last hour yesterday. But, important area right here for the market, especially, being 17 handles off the low. We'll see if we can get out of the box real quick.
All right, traders, let's go ahead and let's do a little bit of a year-end outlook right here. Entering Friday's session, the S&P was up 27.2% year to date. Let's go ahead and talk about some other things that were mentioned also. So energy and real estate has been the best performing sectors of the S&P 500 this year. Tech and financials were also up more than 30%. Those energy and real estate were up over 40%. The 30 stock Dow was up 18.9%. Home Depot and Microsoft have led the Dow gains, rising more than 50% each of those.
They're hiding in there.
So
it's what we've been talking about.
There you go.
And again, in the early January, if we're just talking pure seasonality effects, trades often reverse from the previous year. It may not continue for the entire year, but in that first week, it often happens that the trades reverse. So money is hiding in Microsoft's and Apple's and, obviously this SPY. And money has been basically just hammered in every other of those growth names. So that's just going right back into the same conversation that, hey, maybe these trades might reverse here in the first week, and maybe it's not that great of an idea to have a Microsoft swing long on right now.
I'll tell you one that you got to be careful of. I don't really consider this part of the growth stocks, more of the reopening stocks, but put out yesterday, the CDC pretty much saying to avoid cruise travel regardless of vaccination status. I can't believe they actually said that. Personally, I think that if I was a cruise stock, I would be taking them to court today. But let's go ahead and let's take a look at what is going on out there. They didn't say it about the airlines. That's my personal opinion, is that I would have personally said cruises or both of them. I would
with the airlines, you're kind of
a plane is smaller than a cruise, right? And a cruise has open air that flows through it. But I mean, I guess you guys are the scientists. They can let us know.
No, I'm not this. These have been tough trades. I mean, the CCL. I mean, it's backing off a little bit. I don't know. I should talk cruise lines because I didn't like cruises before the pandemic. So I don't know. I mean, these things they had their runs off the lows, off the March 2020 lows. They got back to your January 20 levels, and now they've just pulled back. It's attempting buy. I just don't know with like the reopening trade. it just hasn't, the reopening versus the stay at home has actually gotten clobbered, but the money hasn't flown into the reopening trades. It's kind of been dead money.
I think you're going to see a reopening trade coming here. I do, and I'm trying to be the scientist on this. As a trader, it's your job to interpret the news to a certain extent. So, we play scientists sometimes too here just to try to get ahead of the trade.
I wouldn't say you play scientist. You play forward-looking a little bit.
Forward-looking scientists, like trying to see that. I've been saying, I don't think it's very deadly. I don't think we're locking down. I think we're going to top, if we follow the South Africa, and this is what the experts are saying too. I listen to this stuff just to try to get the trades off of it as well. I think we're going to top out in cases in the next week or two, and we're going to start to see cases decline. And when you start seeing cases start to decline, that's when to strike on reopening. So I think it's coming. I think there's going to be an opportunity to buy your cruise lines and to buy your airlines, and I think it's coming sooner than later.
I'm a little biased since I bought a cruise already.
What'd you buy? Oh, you bought a cruise or
Caribbean.
stock?
I have a Royal Caribbean cruise, an actual cruise already bought.
There you go. When are you going?
I'm going in May.
Nice. Get out.
Where are you going?
Honduras, Mexico, and the Bahamas also. So, hey, can't go wrong.
Have a great time when you get out there. And, I think there's going to be people that are going to be going along with Mitch here. I do believe you are going to see people going back on cruises and doing stuff again, especially if we get that window between, this variant and the next variant. The wild card is there may be probably another variant coming, and maybe it's going to be more deadly and it's going to shut them down. That's why I don't know if I want to own that stuff long term, but I think you're going to see this reopening pop. Maybe sooner than later. As soon as you start seeing the cases start ticking down, that's when to strike on the reopening. The cases are still exploding here. Ontario set a new record yesterday, 14,000 cases or something. The peak of the pandemic last year, we were like at 6,000. So we are like cases everywhere. I got invited, I won't even tell us, but I'm just saying, I have 3 more friends yesterday reaching out all of COVID. So, but nobody's sick, like sniffles, like not very sick. So I think once we get through this wave, I think in the next week or two, you're going to start seeing cases tick down. That's when you want to strike on the cruise lines, the casinos, the airlines, even some of the retail, the big like even restaurants. Think about that. So I think we might be a little early if we're buying them today, but I think it's coming sooner than later, that reopening trade.
Let's look at what was the one I wanted to look at. I usually like to look at Delta because that's the one that that's looking okay. I mean, it had to move off the low, $40. That one's they're
breakout through 40.
Yeah.
Could get interesting again. Maybe there's I'm thinking more like American Airlines has been hammered a little bit harder.
Let's see.
So NCLH, which is down again today, I think I'd be a buyer. NCLH here. You got a little pullback. We got all excited, 23.38. We pulled back 10-15% from the high 5 days ago. I think you're going to be. I think I'd be a buyer of NCLH. I don't know. I'm putting it on my list.
I'm looking at a lot of these, and then I'm looking at the monthlies, and they never came back to those January levels of 20. I mean, they got near it. American Airlines when, got back over 25. I mean, they're all just. I'm looking at the bottom right chart there. Actually, Delta did when Delta got over 50. Wow, 50 was a high in January of 20. Got over there a couple times, but interesting with all these. I haven't looked at UAL in a while. How did that do? Boom, look at that. January of 20 highs and pull back. But do we got Mr. Hirsch there in the background?
I think so. Mitch is working on it. Mitch never mutes himself.
Yeah, sorry. It's just
2 days in a row.
No topics.
He doesn't do that.
There's a lot of production changes here. Just waiting for Jeffrey here to turn on his camera.
Okay.
He should be having it on in 2 seconds. There you are, Jeff. If you want, give me a thumbs up, letting us know you're ready. There you go. He's ready. Let's go ahead. Let's bring him on in here. This is Jeffrey Hirsch, Chief Market Strategist at Probabilities Fund Management, Editor-in-Chief of the Stock Trader Almanac. How we doing, sir?
We're doing good. Having a nice, relaxing week.
What do you think about this market?
It's looking pretty strong this year. We had a nice year, but I'm concerned about next year.
They front run your Santa Claus rally. They kind of front ran the Santa Claus rally, Jeff.
Well, the point
we were
is,
up 5% going into those last 5 days of the year.
They may have, but that's not the point of the Santa Claus rally. The point of the Santa Claus rally is whether it shows up or not. And if it doesn't show up, that's when it's really important. So it's starting to get me concerned. This is a time of year when, stocks are usually moving slightly higher. It's not super strong trading period, but when it's not, it's a bad sign. It's one of our first indicators. So everyone's all hyped up on, let's make money and trade the Santa Claus rally. No, let's see if it comes in positive or not. And that's the important thing.
Does it just have to be positive? Like, okay, so I know you say Santa Claus rally can dictate to we're looking towards where we're going the next year. Do we just have to be green, or is there a specific percentage we have to be up? What's the parameters here to make you not nervous? I think we lost Jeff.
He froze up there for a second.
Oh, no, we're just going to get to the good stuff.
Yes, we got you.
He came back. We got him.
Still got me?
Yep.
So I was just asking, what's the parameters? How much do we have to be up for the Santa Claus rally for you to not be concerned going into next year?
Just green, as you were saying.
Just green.
It's just a pass-fail.
So, where are we right now? Are you tracking it right now? Because we had the good Monday, and then we've gone nowhere for 3 days.
Pull up your S&P chart.
I thought you might have it right there.
Okay. Wherever the close was on the well, it's
we're struggling with
it seems like I might have a connection issue here. Yeah. That's why I'm not going to go looking around for other stuff. So, it's positive, but it's definitely unnoticed again. But it doesn't matter where it is today, yesterday, Monday. It matters where it is on the 4th, on the second trading day of 2022, because lots of things can happen over any given day.
Yeah.
Even over a week. I mean, anymore. What we call the January indicator trifecta. So we'll reserve our right to augment our analysis and our outlook until the end of the month. But we're already we're already coming into a midterm year that is historically choppy. You probably first quarter, first third top type of chart. I mean, I'd go pull a chart up, but every time I go to pull something up, it seems to drag down a little bandwidth here. My connection may be.
What would you say to someone who says that Santa Claus has been here the whole year? I mean,
it's not Santa Claus.
We rallied the whole year.
It's been a bull market all year long.
Like what? Why does it?
It has nothing to do with Santa Claus. It has zero to do with Santa Claus rally.
I think this was a gift year, and with the market being up 27%, well, for the S&P, not for the individual stocks. So,
how many years in a row you see go like that? How often you see years and years, like 3 years in a row, you get those kind of numbers? You don't. That's why we're considering, we're looking for more of a reversion to the mean. What happens if we get 6, 7, 8, 9% in the S&P? Everyone's going to be upset. That's a normal year. That's probably what we're looking at with, a worst 6 months type of correction somewhere in that May to October period as the midterm, battling, which is already starting to heat up, takes a toll on the market. You've got the president with a lower approval rating. You got the Fed tightening, or at least easing. They'll probably ease a lot more, but I'm not sure if they can keep all up in arms about what's going on with the economy in the world and jobs and that sort of stuff. But yeah,
I don't want to interrupt you here, but just so we could hear you a little bit better, since the internet's coming in and out, can you do me a favor? Can you just stop Cam down at the bottom there, and that way it won't take up so much data trying to share your camera, and we could just kind of listen in on you. There you go. Perfect. We should have you now good on audio, and that way we can just listen.
Cutting out. I'm sorry.
No, we're good. We're good. We're good now. Talk about the way the market performs, we are coming up to a midterm election. Should be some very highly contested, for the Senate, and also for the House. Talk about the market's performance in midterm elections.
Jeff, did we got you? Did we lose you?
Seats in the
Man,
House and Senate. Am I still not coming in so strong?
Yeah, you're coming in and out. But go ahead. Just start over from the question that Joel just asked you.
All right. The president's party generally lose seats in the House and the Senate. We got razor thin margins here. He's shaking his head. That means no, right?
We hear you.
Oh, I see Joel shaking his head.
No, we hear you.
I think it's that he can't hear me. So,
All right, Jeff. Looks like we're just having too many issues today. Hey,
so
let's just
let's
let's probably wrap up the year with this. Can you hear me, Jeff? All right, Jeff. I'm gonna go ahead and pull you down.
Hear you.
I'm losing
Can you hear me?
in and out here, so I'm gonna go ahead and pull you down, Jeff. Looks like we'll have to have you back on in 2022, maybe one of these first 2 days of the year, since we're having a little bit of internet connection problems. Let's go ahead. We'll move on here, guys. Sorry about that. Let's transition in here. Let's go towards the China news that came out today.
Okay.
Let's go ahead and let's cover that. So today, China released news pretty much that they're going to cut its subsidies on new energy vehicles, such as electric cars, by 30% next year. The finance ministry said on Friday. So with this being said, kind of companies that can come into worry about this, right? So you got to look at Volkswagen, General Motors, Toyota, Tesla, all have been ramping up electric vehicle production in China, probably with the mentality that these subsidies would be in place. So definitely keep these stocks on watch today. It could have some effect on their production.
Right now in the pre-market, they seem to not be caring about it. It seems to be a nothing burger because Tesla's actually trading in the green and SPY's red. So, I mean, you got an actual, adverse, going on there. So I think the market is thinking, I think longer term, there could be an issue here, Mitch. So I'm glad you bring up this issue. I think short term, the traders just aren't even looking at it. So obviously Tesla's trading higher here. Let's talk Tesla though, because Tesla's kind of caught in the middle. It's an interesting stock to talk about because it's got the growth components. It's got the nosebleed valuation. You're like, why is that holding up? But what it has in its back pocket, its trump card is it's got the huge S&P weighting. And it's a big chunk of the S&P, and that makes the R's put it into the mix with the Apples and the Amazons and the Microsofts and the Googles and the Facebooks, even despite its nosebleed valuation.
They have to buy it. They have to.
Yep, it moves more with buy than it does with the nosebleed valuation stocks. So if it wasn't in the S&P, it would have got hammered this year, I bet you, just as much as some of these other ARKK names, but because it's such a big component in the S&P, the ARBs hold it up. Like I know our traders that do a lot of S&P ARB, they don't care about they're buying that thing. I'm like, oh, Tesla's down, I got to buy it because the SPY is moving higher. So That's the way it works, and that's big money moving. That isn't that's big money moving in. The ARBs are the big money. Your big money moving every day is all arbitrage. Yep. And S&P is big. Tesla's such a big component of the S&P, it gets held up artificially just because it's such a big weighting. It's going to take, so it moves with, it's more correlated, my bottom line, it's more correlated with SPY than it is with high nosebleed valuation stocks. So SPY matters more to Tesla than anything.
Yeah, just from a technical standpoint here, we did take, half back. That was a big break. We filled the gap from November. And it's just hanging out here. Double top 11.17, 11.19. I think what you should keep an eye on for the next couple days. Obviously, where the SPOOs go, it's going to be a big determinant. But I'm just going to be, besides that double top, because that's a ways away from now, they never got to close over 1100. The best close you could get on this was 1093.94. And that was, I believe that was on Monday. That turned out to be a good level. In Thursday session, the high was 95.55. So not the double top and not 1100. I think your Tesla traders should be focused on 1093.94. That was the high close of the rebound, and looked like it was going to break down yesterday, but just somehow this thing always seems to have it took out the previous day's low, but closes above it. So that's what I'm looking at. Longer term Tesla, have a small position. Been holding for a while. Don't plan on doing anything with it. Gold's popping here.
Yeah, it is.
Above
Gold.
yeah, what's going on with that little thin gold trade? Took out the stops at 1820. Now we got a big red bar to deal with here in gold. So I don't know.
It's like correlated to nothing. Like, it used to be like the place to hide, but now they don't hide in gold. And gold and silver just like do their own thing. So I shouldn't say it's correlated to nothing. It's correlated to silver. But the gold and silver is like, you used to think, oh, the market's sent off, gold's going up. It kind of did that yesterday. But overall, it's just kind of doing its own dance there. And it's like, I used to naturally, when the market would sell off, I'd go and buy gold, even my short-term trading account. I don't never do that anymore because sometimes the market goes down and gold goes down too. So it just kind of does its own dance. But, we can trade anything technically, Joel. Break down technicals on GLD.
I was looking at the futures, but I'll go with this, kind of the same thing here. This was a gap down because of the futures, right? That came in. So I just like to look at the gold chart because I look at it more, and you got to work into this bar. I mean, you had 3 really bad days, right? This was back in November. So I'm just not going to rip up through these days. I mean, now the next target on the upside would be 1853, but I don't know. Also, the other thing with gold too is you just got to be in it to win it. It's like you come in one morning and it's gonna, it'll be up $25, and then it keeps on going, or it comes in that has the big moves overnight. But just right now, whether you're trading GLD or the gold futures, we're clearing this resistance at 1820. Let's see if we can sustain a close there. And then we got some work to do. I mean, I just don't think we're going to rip right back up through those bars. But silver, and I also noticed that silver, they don't always go the same way either. Silver and gold. Sometimes, they used to always be highly correlated. Silver, I think you got a little bit more room on this one up to 2350. If it's going to follow the gold trade, it hit 2350 earlier in the week.
Yeah, the only gold I watch is Gold Rush, and that's on Discovery. So I don't think I'll be trading the stock today.
Is that a good show?
See. Oh, it's a great one, Joel. If you haven't seen that, that's my favorite one. So let's go ahead. Let's transition in here. One thing to mention, though, about that China news, the ministry had said in April 2020 that it would cut from 2020 to 2022 by 10, then 20, then 30. That's why this is a little bit different. They're going straight after their high number there of 30% for next year. All right, let's go ahead. Let's take a look at Pfizer. British regulators have approved the use of Paxlovid. I don't know if I said that right, but maybe Joe can correct me if
no,
if I
I'm
said
not.
it
I'm
wrong.
not the drug.
The drug maker COVID-19 antiviral pill for people over 18 with mild to moderate illness. So Pfizer getting an approval from British regulators today on Paxlovid, the drug maker's antiviral pill.
It's just run too far. I mean, Pfizer has had one of the most incredible runs it can have, going in October from $41 to getting over $62. A 50% move for Pfizer in 2 months is like, yeah, it's unbelievable move for Pfizer. Pfizer's a stock that moves 50% in 5 years, not in 2 months. So if you're chasing Pfizer now, you're way late to the party. I'm long Pfizer, full disclosure on the long-term account. I don't intend to sell it because it's still cheap, and I'm still in for the value play. I've had Pfizer in my portfolio for 15 years. I'm not getting rid of it just because it's overbought, but if you're coming in now, I think you're way late.
Interesting setup. You got your 2-day low at 57. I see another low at that area, 57.08, 57.07, double bottom, triple bottom if you want to include that 57.16 from the 21st. So if you're protecting profits there, That's a good area. On the upside, we nearly got to 62, 61, 71. So that's just about a 5-point move, 2.5 to 59.5 area. That's what Pfizer's going to have to take out, and you actually have two highs that area, 938 and 945. Maybe the paper's stacking up at 950. So that's what I'm looking for. Break down below 57, more on the downside. You can clear 59.5, the pair of highs. Probably paper reloads at 60 on this one as well, because after you made that high, you had a 60.08 high. But I didn't pick this up that long ago. I think I picked it up on the in the lower 40s, because I was just looking at this
You're
breakout
perfect
here.
timing.
Yeah.
I sit there for years. You get out and you make the trade that fast, Joel. Perfect timing, buddy.
Well, I looked at the monthlies, and I'm like, man, this, and I tend to buy the dog sometimes, and I think Lisa was also trying to make up for her Peloton trade. I think she liked this one too. But interesting year best year. But it's been a dog for how long, right? I mean, look at all the years on the monthlies and the trading range and everything. So we'll see. It's getting a little volatile now, though. Now that it's a $60 stock.
All right, let's go into some Bitcoin stocks here. Let's talk a little bit about Bitfarm. Bitfarm coming out with a catalyst today. Bitfarm secured a $100 million credit facility, and these are kind of comments from the CFO here. Bitcoin mining is highly a capital-intensive industry. We seek to strike a balance between maximizing financing flexibility and minimizing our overall cost of capital. Our new 100 million BTC credit facility adds another component of our diversified financial strategy and contributes significant non-dilutive capital to fund our global growth initiatives, which includes 4 farms with 298 megawatts mining capacity under construction. So Bitfarm's catching a little bit of a push there today, but also the other Bitcoin stocks that could just be trading with the growth stocks. So I'm keeping definitely these on my radar today.
They could. Some of them are beat up, so you could see a little relief pop in early January. They don't set up quite as well because Bitcoin really isn't down on the year, so I don't see it as as much of a January effect as some of the other names that we've talked about. My blockchain, my Bitcoin mining play is Hive blockchain, HIVE, because of Frank Holmes. And he comes on our show. The guy is so smart.
Oh, it's back down.
We know him. I'm investing in HIVE just because I believe Frank is smart. So I don't even look at it. I did sell some when it just got stupid, but I actually should probably rebuy the shares that I sold. It actually has got a lot of support here. HIVE around 250.
You know what? It's I think with Bitcoin, and I kind of said this like when the futures came online, and now with these older ETFs that are trading it now. I mean, it just kind of feel like it's like the ARBs are, there's more ways to ARB it, right? And coming in, and I think that's kind of reduced some of the. When one thing gets too out of whack, they come in and they buy the other. So I'm looking at the Bitcoin chart, and it had the big run up, it's had the consolidation. I mean, as long as this thing stays above 45.5, you got to stay in the bullish camp. But when did those ETFs come on? They're like 3 or 4 came on right at the same time, and that was when the thing was at like 65K. So I don't know. I think the ARBs are kind of keeping a quiet.
BITQ,
yeah,
RM, thanks. That's a good, if you want to just trade it, you don't want to trade.
It's so funny. Like Bitcoin was high, and we were all worried about inflation, and now we don't talk about inflation. I mean, it's funny how the
Joel, I'm still very concerned about inflation going into next year.
I don't think
that's not going away. That's just more along. It's just a dead bird. You're just beating something that everyone sees. I don't think inflation is going away anytime soon.
I don't think
I'm still talking about as much as we're talking about it.
Yeah, it has gone out of the headlines.
Yes.
That definitely we have seen. Let's go to here. Mentioned in the chat. Interesting is Penn a buy here for the kind of the growth effect. And mentioned in the chat, I give you the shout out to maybe a Super Bowl effect.
I think this is I got the reopening. I think this has got the beaten down growth names. I'm long Penn, full disclosure. We know that. I've been beat up on it. I think it sets up okay.
Before Joel gives the level that I'd probably give myself, I've been looking at that 52 for a very long time.
52? Okay.
And then yesterday we get through it by 8 cents and then pull back. That's the level I'm looking for today. At 52 takeout.
52 takeout. I've been a little higher on this one, and it's just because there were more highs at that area. And so for me, 53. I see the 52. What did we get? The 52.08 yesterday, and I do see another 52.01 high, 52.20. So you do have 3 highs in that area, but I see 4 or 5 highs right around 53. So, but good day yesterday, traded down 30 cents. You also have 3 lows in the 48 handle. So if you're sticking it out here, taking a shot at 51, risking below 48. Boom, you get above 53. I think things open up the inside. As far as like the Super Bowl, I mean, those are they're one-time things, right? And then the actual betting and the earnings from that, whatever the company makes, that's not going to be reflected until what? It will be taking place in Q1. Right, so you're not going to get.
They
those
run those
results
stocks
for a
up into
while.
those events.
They do the run.
Okay, so let's talk Penn, DKNG, throw it all, and full disclosure, I got both of those now. DKNG, I think these are your reopening. I think they're beaten down. I think they set up well. If we start to look past, if we actually start seeing the cases tick down, these stocks could move. So I don't mind owning them here. I think they're both ugly. They're both beat up, but on DKNG and full disclosure, 25.80. You got the double bottom from yesterday. This was one of the laggards that I did pick up, and so I've got it on for a swing. So I got Penn on long term. I got DKNG on for a swing. Leaning on the low of the move, saying I think we get a relief pop in early 2022.
30, just because it's just a nice round number. No exact highs there, but kind of look at that. Would make kind of turn the. But for the month, man, look at this. I mean, from October it closed at 46.59. Then you lost another 8 sticks in November, 34.55, and then who knows where we're going to end up today. But if it closes in this area, it's going to be down another $6. So maybe this one hang out in January, get a green candle going your way, and maybe this one will take. But I know you're looking for the immediate effect.
Again, technicals here are ugly. I'm going to fully be on with you. You're below every moving average. JC Peretz would not even touch us with but I do touch this stuff. I use technicals as one thing, but my main thing is, looking at relationships and seasonality effects and different things like that. I've seen this game played out before, so I'm just playing the probabilities. The probability says this stock got the crap kicked out of it all year. We've got, for DKNG, sports are kind of in a mess right now. We obviously had some, obviously a lot of NHL games canceled, World Juniors canceled. You got basketball, you got football. You've gotten issues there, but I think we're going to get past this. I do too. We're already looking past it. I don't think Omicron is the zombie apocalypse. I don't even think it's killing very many people. So that makes me want to own a stock like this, because this has been held down not only by tax law selling, but because some sporting events have been shutting down. They're like, well, you're pretty bad to be owning a stock that's betting on sports if you have no sports. And there was people, don't kid yourself, concerned that we were going to shut all that down. I don't think that's going to happen. I think it's all going to come back online. I think people are going to be like rah and getting right back into it. And so it's a bit of a reopening trade too. So I like DKNG and Penn a lot here.
They still do.
I don't like doing that, but I am.
They still got they're still doing their promotions, man. I mean, it's so easy to pick one team to win. Bet $50. You can win 1,000.
Joel, let's just say I got close to $1,000 in sports
free
betting.
Money?
Free money.
Close the account.
Free money, baby.
Good job. How do you get all this free money? What do you do to get the free money?
Oh, gee, sign up, Dennis.
Sign up, you get free money.
Promo money.
They give you
awesome.
I like
All
to
right.
have fun
Well,
on the
I'm going to put a
weekends.
bow, on this year, and I'm going to hop over to pre-market prep. Missed a lot of issues here to talk about. I like to really, we got to get green early this morning, and that's 72 and a quarter in the S&Ps. We get green, we take out that pre-market high, then we can rally into the year. And I don't know if this is going to apply to your individual stocks and whatnot, but that's my setup. We take out that pre-market low, and there's not much down there, folks. So keep an eye on the pre-market low, 47.50. Mitch, great job. Dennis, great job. I'll check in with you guys later on. Have a good day.
Thank you, Joe, and wish you luck. Wish you luck, my friend.
Happy New Year to everyone. I'm going to go to Happy New Year to everyone. We've been talking this setup for a while there, so you guys kind of know how I'm thinking for early 2022. We'll see what materializes. Maybe I'll be dead wrong. I hope I'm right.
Hey, well, a lot of Happy New Year's out there from the chat. A lot of love mentioning a lot of education for the whole year. So I definitely wanted to give you that shout out, Dennis. They definitely appreciate all the work that you put in. I know you don't have to join us here every single morning. You do good enough on your own to not be here. So
I like talking stocks.
Hey, we appreciate it.
I do because I like it too. And I love the chat. You know what? I get good ideas from the chat as well. You guys are great all year. Everybody, obviously my Twitter followers as well. I get great ideas from everyone there. So thank you so much. And hopefully we can do it again in 2022.
Yep. Much love out there. Thank you, Dennis, and have a great one and many blessings for 2022, my friend. All right, guys, for you guys out there, I wish you guys the same, many blessings in the next year. We're going to go ahead up and wrap up today's content. No live trading today, no Benzinga live or at the close. We're going to go ahead and spend some time with our families. I hope you guys do the same. Smash that thumbs on up. We'll be back on Monday, like always, and getting after it into the new year, looking at what's going to be moving, what's not. Did we get the Santa Claus rally? Where the growth stocks are? Is China still kind of hitting these EVs? We'll pay attention to these stocks. I wish you guys the best into the next year, and I hope that you guys had a great 2021. That's going to do it for us here at Benzinga, and have a great one, guys. Till the next time, and I'll see you in 2022.